Gold is on an absolute tear right now. I mean, it's hitting record highs, and it's sending these huge waves of excitement and, let's be honest, a little bit of anxiety all through the global market. We're seeing this frenzy that some are even calling a new gold rush. So the big question is this a real sustainable rally, or is it a massive speculative bubble that's just about to pop? Let's get into it. So here's what we're going to cover. We'll start with the panic buying that's happening as we speak. Then we'll look at a wild prediction that's adding fuel to the fire. After that, we'll explore the flip side, the argument for a potential crash. We'll also dive into the unique role India plays in all of this, and then we'll wrap up by looking at what these market signals tell us about the bigger picture. So, just how intense is this gold fever? Well, we're not just talking about some investors shifting their portfolios around. No, we are seeing genuine panic buying across the globe. Consumer demand is so high, it is literally overwhelming the supply. And to give you a real-world example of this, just look at Japan. One of the country's biggest gold retailers had to completely stop selling gold products under 50 grams. Why? They just couldn't get their hands on enough of it to meet the crazy demand. People are just buying up everything they can find. And it's not just happening in Japan. We're seeing really similar stories in places like Vietnam, too. Now, this retail frenzy is being absolutely supercharged by some incredibly bold predictions coming from the very top of the financial world. It's a really powerful argument. This is the bull case, that gold still has a lot more room to run. Okay, this is the quote that's making all the headlines. Jamie Dimon, the CEO of JP Morgan, one of the biggest banks on the planet, has suggested gold could hit $10,000 an ounce. Now, just for some context, that is more than double its recent record highs. A prediction like that from a guy like Dimon is basically like pouring gasoline on a fire that's already raging. So what's the logic behind such a huge claim? Well, the bulls, they point to a perfect storm of factors. You've got the massive U.S. national debt that just keeps growing, you've got escalating geopolitical tensions all over the world, and there's this growing search for alternatives to the U.S. dollar. All of this pushes investors toward gold as a safe place to park their money, which in turn fuels even more demand from everyday people and inflows into things like gold ETFs. You know, those funds that track the price of gold. It creates this really powerful upward cycle. But, for every bull, there's always a bear. And their counterargument is just as compelling. Is all this excitement blinding us to the fact that we might be in a gigantic bubble, one that's about to burst? Willem Buter, who used to be the chief economist at Citigroup, has a pretty sharp take on this. He basically argues that our belief in gold's value is just a historical hangover. We are, in his words, thoughtless prisoners of history, just clinging to this old idea without really questioning if it still makes sense today. Imputer draws this direct line between gold and Bitcoin. He points out that neither of them is a productive asset, right? They don't generate cash flow, they don't produce anything. His whole point is that both are valued based on what we all agree they're worth, not on any actual cash they produce. And this completely reframes gold, not as some stable investment, but as a speculative commodity, a lot like crypto. And that brings us to the elephant in the room, the single biggest threat to the price of gold. What if the biggest holders of gold in the entire world decided to sell? Just look at these numbers. This shows you the immense power these banks hold. The US alone is sitting on over 8,000 tons of gold. That is more than double the next country on the list, Germany. If even one of these major players decided to sell off even a part of their reserves, it could completely flood the market with supply and send prices through the floor. So, to kind of sum up the bear case, prices could fall if the US Fed decides not to cut interest rates, which would make other investments look more attractive. Then there's the really speculative idea, but one people are talking about more and more, that a country like the US could sell its old world gold to build up reserves of a new world asset, like Bitcoin. And finally, if global tensions just ease up and the retail panic cools down, the main things driving this rally could just disappear. Okay, so you absolutely cannot have a conversation about gold without talking about India. The country has this unique, deeply cultural connection to gold. And its market, well, it operates on a completely different scale. Get ready for this number. It's estimated that Indian households, just regular families, collectively hold around 25,000 tons of gold. And some estimates you see out there suggest it could be even higher. This isn't just a lot of gold. It's more than the official reserves of the top central banks combined. And this chart just puts that staggering number into perspective. The collective wealth stored in gold by everyday Indian families absolutely dwarfs the official holdings of the world's most powerful countries. This massive private ownership creates this fundamental layer of demand that you just don't see anywhere else in the world. And this recent rally has created enormous wealth. So take India's sovereign gold bonds, which are basically government-issued IOUs that track the price of gold. Well, investors in one series from 2017 just saw a mind-blowing 338% tax-free return. The government actually had to pay out that difference, turning its loss on paper into a massive win for individual investors. So let's zoom out. What is all this intense activity in the gold market really telling us about the bigger picture? They often call gold the canary in the coal mine for global stability. A huge part of gold's recent rally has been fueled by fear. But what happens if that fear starts to fade? There are whispers of high-level talks to de-escalate the war in Ukraine. There is a growing feeling that the trade war between the US and China just isn't sustainable. And we're seeing strategic moves, like India strengthening its ties with the US through energy deals. If this kind of global stability actually starts to take hold, that safe haven demand for gold could cool off, and fast. So we're left at this really fascinating crossroads. On one hand, you have these powerful economic forces and deep-seated fears pushing gold to new heights. But on the other hand, you have serious warnings of a historical bubble and these little signs of a potentially more stable world on the horizon. And that leaves us with the ultimate question. Right now, is gold a smart hedge against uncertainty, or is it one of the biggest speculative gambles on the market? The answer is anything but simple.